What is going on? My name is Steve Zahnd. Welcome to Inside Guelph, a long overdue market update coming at you live right now. All right, so let's just jump right into it. Why not? So before we start, my name is Steve Zahnd from the Zahnd team, the only real estate company in Guelph that's going to offer you a guaranteed 5-star real estate experience. So if you haven't checked out our new website, go ahead and check it out. It's right here. A lot of good information. Tells you about a guarantee. You can browse properties and all that good stuff on there. All right, so let's dive into the market update. So I changed things up a little bit. I wanted to make sure I was bringing you better information and trying to digest it a little bit more for you. Also, there's a really low amount of inventory right now. So since there's such a low amount of inventory, I kind of wanted to deep dive a little bit more about why do we have such a low amount of inventory, and then also at the same time investigate, is it really a demand issue or supply issue? So let's just dive right into it. Please feel free to comment below, like, do you like this type of presentation better or do you like the old ones better? I'd love to hear your feedback. As well, if you do like content like this, make sure you hit that subscribe button and that notification bell so next time I release content like this, you will be notified. All right, so here we go. Let's just jump right into it, and I'll kick it off the usual way. Obviously, guys, share the screen here, and I'll try to zoom in a little bit so you can see that a little better. All right, that's better. So we'll kind of just dive into what's currently on the market and what's going on. So our 5-year average of inventory that should be on the market right now, as you can see here, we should have about 254 units on the market given our 5-year average. And currently on the market, we have 95 pieces of inventory. So as you can see, like I said earlier, we have a low amount of inventory. This is our 5-year average mix of properties. So here you can see we usually have around 147 single-family detached homes on the market at this time of the year. Currently, we're at 60. For semis, we should have 13. We're about at 5. For townhouses, we should be about 46. We're at 18. And here at condos, we should be about 48, and we are at 12. So that's currently what's on the market and how it compares to a 5-year average. All right, so I went through a ton of data. I'm not going to show you all the different data, but I did a lot of deep diving into the real estate market and the inventory. So I was just thinking, why do we have such low inventory? And the reason I was asking myself this question is because when I was looking at the average sale price, and I kind of can show you here, I'm going to bounce around a little bit. When I'm looking at the average sale price, especially on a cumulative basis, so multiple years stacked together, multiple months stacked together. It's a better way of looking at it. So here's this chart. Here's our average sale price. Here's January, and these gray bars here represent the amount of homes sold in that specific month. Okay, so as you can see here in January, we sold 141, 251, 362, so on and so forth. So this is the amount of homes we sold every single month. The red line here represents the accumulation of those months together. So 141 plus the February plus March plus April plus May, June, and so on and so forth. The reason I wanted to show you this is because there's two ways to represent the data here. You can go month over month and just show like the monthly ups and downs of what's going on with the market, or you can start doing an accumulative approach. And the reason I like looking at a cumulative approach is because there's more data. And as you can see here, if you have 2,042 sales and averaging those versus just averaging 141 sales, you're going to get a better picture of what's actually happening this year, and you're going to get a better representation of what the actual sale price is, right? So average sale prices. So here you can see we did have a sharp spike up in average sale price, and over the last 1, 2, 3, 4, 5 months, it really started to come down. We hit our peak here in May at 750, and now we've started to come down 746, 746, 747. So we're right around that $745,000 average price range. So you can see that the average price is really starting to flatten line out, and you can actually see the units sold is actually starting to decline as well. And I found that interesting, right? Because we're supposed to be in a super hot market, and why is the average sale price flattening, and why do we have such low inventory? So just to put it in perspective here, right? I mean, we have a tremendous amount of listings coming into the market in 2021, and we also have an excess of flowing out of the market. But it's slowed down so much in the last 2 months that we're really not going to break any records this year. It doesn't look like if the pace of inventory flowing into the market and flowing out to market is staying the same, we're probably going to end right around where we usually do. So this year is actually not any more different than any other year in terms of sales volume, it looks like. And I'm going to show you what I mean here. So sorry about jumping around here, but just bear with me here. So when I'm looking at the inventory, I was like, okay, what's going on? Is it really a demand issue right now, or are we feeling the effects from previous years? And what is the real issue here? And when I look at 2019, this is the inflow. The green bar is the inflow, and the red bar is the outflow in 2019. And actually, you could see that we had above average volume. So this right here represents inventory. Dark line right here is 5-year average inventory. Gray line is that year's inventory of that specific year. So here you can see in 2019, we had more inventory than our 5-year average. And it started to slightly go down and decrease and start meeting that 5-year average. And it's because we lost 41 pieces of inventory on the market that year. So whether it was sold or failed to sell, so this includes failed to sell or sold, we actually lost 41 pieces of inventory after the year was all said and done, right? And then if we look at 2020, here was our unusual inflow and outflow. This is right at the height of the health crisis that we had, and then it shot up back to once things started normalizing a little bit, inventory shot back up, and then we had a really strong year. And you can see here again, we had a lot more listings outflow, so failed to sell and sold, than we did bring into the market. And then actually we lost 95 units of inventory last year as well. So as you can see here, we're losing inventory. And then if you look at, let me move this guy right here, and I'll show you why I'm bringing those in for the future. And here you can actually see we're actually at a net positive 65 units for sale this year. So you're like, okay, well, this doesn't make any sense, right? Like we're in a hot market. Sorry. We're assuming that we're consuming more than we're bringing in, right? However, inventory is so low that the consumption can't really exceed what we have brought in because we've consumed all the inventory. We're at rock bottom levels. You can see here, right? The gray line is current inventory levels in that year versus the average, and above average, and now it's starting to meet the average. In 2020, it started below the average, and it just never could catch back up. And at the end of the year, you can see the gap widen here between outflow and inflow, and just decimated our inventory levels right here. So this has been a multi-year issue stacking up to deliver us to this year, where we started 2014. We started 2021 with only 14 pieces of inventory on the market, and that's why you can see that even with this 65 unit gain, we're still very suppressed. So I wrote a conclusion up here that that the inventory crisis that we're facing here is mostly because of a lack of supply to the marketplace. There's a lot of there's a new election coming up, and we don't really know who's going to be in power, but the housing platforms are definitely very important for people about bringing new supply to the marketplace. There's also some other measures that they're looking at doing, like getting rid of blind bids, doing more foreign buyer taxes, for example. And those things are great, but that's not going to solve obviously the main issue here, which is a lack of supply in the marketplace. Because if we have such low inventory, even though demand and inflow is starting to cool off, it looks like, especially when you look at the average sale price and the inflow outflow, it looks like things are starting to stabilize. But since we have such low inventory, even the slightest increase in demand is going to throw everything way out of proportion. I think we're in a situation where the inventory was so low this year to begin with that even though if the demand had stayed the same, it looks like a dramatic spike, even though it likely didn't change much. That's because there's just no inventory, right? And if there's no inventory, and even if the demand stays the same but the supply goes down, that's what's going to continue to drive prices up. So, essentially what I'm looking at here is we really need to find more ways to bring inventory to the marketplace. And I'll show you some interesting things here. So I started stacking together multiple years here to show you what a balanced market typically looks like. So in 2018, we had a more typical balanced market. And the reason I say that is because it followed a traditional seasonality of real estate. So, you got low inflow in January, February, winter months. And then March and April, May, you get that run up and you hit that spike in May of maximum properties to the market. That's the traditional spring market, right? Lots of inflow. And then you get back into the summer months here. People are going away. They're enjoying their summertime. And then you get that second bump in when school's back on, when life is back to normal, everyone comes back in, and there's a dramatic bump in inventory, in inflow. And as you can see here, the consumption curve really stays pretty even. And this is the interesting thing too. If you look at all the end of the year data charts with inflow and outflow, as you can see them right there, people always ask, is it good to sell in the wintertime? Should I sell my house in the winter months? And if you look at just this data, it's absolutely yes. You could see that demand and inflow is the demand and outflow is way higher than inflow. So there's actually not a lot of options to choose from. So that usually does spike buying demand. And you can see that the demand did not really slow down too much. It's actually about even with the beginning of the year. So it looks like inventory just falls off the cliff inflow falls off the cliff while demand is not following it at its equal pace. So it actually is pretty interesting to see because people always ask, is it a good time to sell? Is it not a good time to sell? Well, I mean, really right now, any time is a good time to sell. But if we're in a more balanced market, I mean, you just really have to look at the numbers, right? And that's why at the Zahnd team, we take this so seriously because we want to make sure we're giving people the best information. All right, but so that's 2018. You got a bump here and you got a bump here. If I'm bringing 2017 levels in, as you can see, here was an over-exaggerated bump because the government stepped in and put in some cooling measures to cool the housing market, because 2017 was one of the hottest markets we've had in a very long time. And I also wanted to bring 2017 to compare to 2021 because 2021 has like an extremely unusual chart pattern. I mean, when I'm looking at all the different chart patterns, this is by far the most unusual chart pattern, and I'll tell you why in a second. But here you have a major spike, an over-exaggerated spike, because everyone's trying to rush into the marketplace before all these changes to foreign buying, qualification rates, and interest rate increases happened in 2017. Everyone's rushing to the market to try to catch that hot market before it cooled down, and that's what saw the influx. And here you had another typical spike in September, bringing houses to market, and here is 2019, right? Another similar run up in May, cool down in the summer, bump up in September, right? And then the typical rundown. So why am I showing you all these charts? Well, if you look at September, if you look at 2021, we had a massive run up to meet the demand of early in the year. And this is where you could see that we had a ton of outflow and inflow, and that's why 2021 was on pace to break all the records for listings brought to market and listings sold. However, as you can see, we're just having a massive drop in inflow, and that demand is actually dropping with the inflow, and that makes sense, right? If there's not a lot of properties coming to the market, you can't consume them. But it's interesting because why is there not more listings coming to the market right now? And since we actually are in a surplus of, let me just move this over, right? We're technically in a surplus of 65 units from year to year, but since with a 65 unit surplus, we're only still at 95 properties. So, I mean, that's why I feel like the demand is a little the demand is a little bit over exaggerated, because the average sale price, the average inflow and the outflow just can't keep up. It just can't build up that new inventory. So I'm interested to see what happens here. Like, usually we get a big spike for inventory coming in, and we're just not seeing it. And I'll just show you that right now. We'll go into the average inflow versus average outflow. So as you can see here, right now you can see that 2021 is bringing 9.7 properties to the market every single day, which is on pace to smash any record, and we're supposed to have the biggest year ever this year, right? So it's about an 18% increase in the 5-year average. However, the current month, the month we're in right now, in the last 15 days, so usually I look at the last 15 days inflow and outflow numbers to kind of determine what kind of trend we're playing out. And right now we're in a 6.9 homes per day coming to the marketplace. And our 5-year average is almost 10. So for some reason, no one's bringing their houses to the market right now. I'm not sure if everyone already sold at the beginning of the year or what's going on, but it's very unusual why no one's bringing houses to market when typically at this time of the year, we're bringing tons of homes to the market. And with the health crisis being kind of, we're not in a wave right now. I'm not sure why we're seeing such a decrease in properties coming to the market. So as you can see here, right, this is the inflow way above 5-year average, meeting the 5-year average, and now just falling like a rock into the close of the year. Looking at inventory outflow versus average outflow, again, same situation here. Had the spike up, now coming closer to the 5-year average, and now just falling like a rock into the later half of the year. So usually for the year right now, we're selling 7.9 homes a day. We have an average of, and our 5-year average is 6 homes a day. So we have a 25% increase in sales. But the current month right now, as you can see, we're only selling 4.5 homes a day right now, which is well below the average of 6.3 homes. It's pretty interesting stuff. And here is the fail to sell. The reason I brought the fail to sell up is like homes are also not failing to sell right now as much as it used to be. This is our 5-year average homes failing to sell, and this is where we're currently at. So we just obviously had a little spike here in homes failing to sell. That's probably sellers bringing their house to the market, not getting what they want, taking it back off, putting it back on a lower price, or just taking it off altogether. But now, yeah, really homes are not failing to sell like they were at the beginning of the year. It's probably because there's not that many homes on the market. Before I get into the predictions, I wanted to show you something else. What I saw here, it's very interesting. When why we're in an inventory crisis. If you look at our 5-year average, it's pretty interesting. We have 8.3 homes come to the market every single day based on our 5-year average. We have 6.3 homes selling every single day on average, which gives us a net difference of 1.9 homes, right? So we should essentially have 2 homes per day per month of excess inventory. However, when you take into consideration that on average 2 homes fail to sell per day, per month, you actually have a net difference of 0.02. So we're actually losing inventory every single day, every single month, and every single year over the last 5 years. It's pretty wild when you put it into that kind of perspective. It just goes to show that you can't continue to bleed inventory every single day, every single year, bleed inventory and not expect to eventually run into an inventory crisis. I wish I was kind of doing this kind of data before, because obviously we could have saw this coming, but now that we're in this situation, I had to dig a little bit deeper to see what's going on here. So is it a demand issue, or is it just a constantly bleeding of inventory that leads to even if demand stays the same, if the supply keeps dropping, the prices are going to go up. So how do we fix that? Bring more supply to the marketplace, find ways to cut the red tape. I was talking to some developers the other day, and just taking 5 to 6 years to bring a project to build, to even start building, taking 5 years to even get the permission to start building on the project, it's not going to fix any kind of issues. There's way too much red tape. People can't bring projects to fruition, and it's slowing down the amount of inventory. And it's just people putting roadblocks up, and yes, there definitely has to be controls in place, but 5 years to bring a project up, it's just unacceptable in my opinion, and we need to change that if we want to fix the inventory issue. Anyways, so here we go. Let's get into some fun stuff here. I hope that was helpful. I hope you're finding this information helpful. If you would like to leave a comment and let me know what you think, I appreciate it. So here we go. Here's the month-over-month view of our average sale price. So in 2021, we had started at 709. We had our spike here up in May of 782,000, and now we started to cool off a little, brought back to 727, 740, 757, and now 736. So if I zoom out a little bit here, I stacked this up on top of the months here. So I did some fun math. Like if you bought back in December of 2020 right now, and this just goes to show like people are potentially sitting on their hands, not jumping into the market because they might be afraid that they're buying at the peak. And I'm just going to show you something here I think you're going to find interesting. If you bought in December 2020, you'd be up $98,000 on the average sale price. If you bought in January 2020, you'd be up $213,000 right now. So January 2020, that's back right here when the average sale price was $523,000. You'd be up a solid $213,000. And the reason I wanted to bring you back, if you bought at the peak of 2017, which I already mentioned, I highlighted it right here, which is the highest average sale price of 2017. This was at the peak of the hot market in 2017 before the cooling measures came in. And as you can see, 562 is higher than the 523. So it took a long time to get back to this 562. But if you bought at the very peak when prices were too high and people were overpaying for houses, you would still be up today $174,000. And that's if you bought all cash. Like obviously we can talk about leverage and like your return on investment on your leveraged asset, but that's still a pretty interesting perspective there. So it's not timing the market, it's time in the market. So if you're not in the market yet, it looks like it's just going to continue to run away from you unless you go all in. So if you need to talk to an expert, obviously we're here for you, and let's get you that house. Cool. Moving on. What are the other metrics looking like? So our average days on market here, we started at 10 days, average days on market in January. We've climbed all the way up to 13. Just another indicator that things are starting to flatten out a little bit. Here we go. We had 112% list price to sale price ratio average at the beginning of the year, and it's starting to come down slowly. And here we are now at 105%, still obviously above market value. That's probably because, again, we don't have any inventory, and if the demand even stays the same, it's going to still increase prices. What we got here, year over year, month over month, perfect. And here is here's the average sale price. I already showed you this. It's the amount of units we're selling, cumulative inventory, and here's the average sale price. As you can see, it's starting to flatten out. So you can kind of see that the market is kind of cooling off a little bit. Not cooling off necessarily, but it's starting to balance out a little bit more, which is interesting considering we don't have any inventory. All right, so let me get into the predictions here. So here is our 30-day forecast and what we got right now. So today's inventory, we have 95 units on the market as we speak. So the trending 15-day inflow, how many properties are coming into the market based on the last 15 days, is 7. So we should see in the next 30 days 208 properties hit the marketplace. So the total inventory, so if we take the 95 plus the 208 units we're going to be bringing to market, there's going to be about 303 units of inventory to consume. Okay, so the 15-day outflow is looking around 5 homes a day going out of the market. And that's about 144 for the month, right? For the next 30 days, we should see 144 units consumed. The 15-day trend for failed sales, for homes failing to sell, is currently sitting at 1 home a day. So we should see 30 homes fail to sell in the next 30 days. So the total outflow is the 144 plus the 30, which makes 174 homes flowing out of the marketplace. So we got 208 homes flowing into the market, which is stacking on top of our existing inventory. So that brings the total inventory levels up to 303. We see about 174, or predicting about 174 homes leaving the market either through sale or failed, which will bring our total inventory to be a prediction of 129 homes on the marketplace. Okay, so if we take that 129 homes, so the reason I always do this with sellers, right? Because I want to let them know, if you're doing an absorption rate analysis for the day of today, and you're like, yeah, here's the current absorption rate, and this is what we're looking at, this is how many units are on the market, and if no new homes come to the marketplace, therefore, you have this many months of inventory. I know that sellers usually don't flip on a switch like that and all of a sudden they can sell. They take time to get to the market, right? So I always like to do a forecast and show them, hey, based on the trends that are happening right now, 15-day flow in, 15-day flow out, we're looking at a future pace of about 129 homes. So if there's 129 homes on the market when you come to the market, we have 129 homes that we're competing with. Obviously, then you break it down based on class of home, average sale price, and then you really see what you're competing against. And if you're the only game in town, that's an opportunity to push price. If you're competing with a ton of people, then that's an opportunity to make sure you're positioning yourself properly. Anyways, I hope that was helpful, just to get a little insight. So in the next 30 days, we should be looking at around 129 homes on the market. So if no new homes after that date come to the marketplace, how much inventory do we have? How much time do we have to last? Well, based on that 174 outflow, we would have only 0.74 months of inventory. So all the inventory would be gone in about 3/4 of a month. So let me just wrap up here. So as you can see, what we're predicting for inventory levels, still well below the October levels of around 260 units. So we're still really far below that. But inventory, I expect this curve just to kind of come across and meet right here. So we're looking at flatlining here a little bit, when in September, usually we see a nice spike in inventory. So unfortunately, right now we're not seeing that spike, which is going to continue keeping us in a low inventory market. So yeah, we need to bring more homes to the market. So if you're thinking about selling, if there's a best time to sell right now, this is the time that obviously I said usually we get a spike, and I showed you that with the data up here, right? So we usually get nice spikes in September. So if we're not getting a spike and there's still all this demand here that needs to be met, it would be a great time to bring your house to the market for sure. So I hope that's helpful for you. I appreciate you spending all this time with me. If you have any questions, please feel free to reach out to us. I love talking about this stuff. As you can see, I geek out a little bit about it, but we just want to make sure we're bringing you the best information. So again, thank you so much. My name is Steve from the Zahnd team, and we're here to help you. Thanks so much. Bye.